Good morning, everyone. How's everybody doing? Well, hope you guys had a good long weekend. We're back at it. A little bit of liquidation. Every January, well, actually after the end of every year, I kind of wait for the liquidation because these markets, they always mark up assets at the end of the year and then liquidate back down to cost basis and then start again, right? So let's go take a look. We'll start out with our daily chart. One of the levels I'm looking at on the daily is this 68.90 area, and I'll show you why. Now, I'm not a technical analysis guy, right? I'm not poo-pooing it, so don't get me wrong. There's nothing wrong with technical analysis. I'm more of a practical analysis guy. Um, so when I look at something, I need to understand how to use the information in a practical way. Hey, how you doing, Marcus? How you doing, Shanghai? Raj? Right. So there's fundamental analysis, right? There's technical, right? And then there's practical, right? Now, the first two are talked about ad nauseum, right? They talk about fundamental and technical analysis, and those two love to battle each other, and they like to have dance-offs and all that stuff. But I'm like, let's take a little bit of both, and let's use practical analysis. So if you look at the market over the last, oh gosh, back to, going back to November, right? We had this move down, and you'll notice that the 68.90 area, we've been in distribution above that for a few months. We had a bit of a sale here, and now we're having another sale, okay? And we have a gap, okay? Well, this is a news-driven event. So when you have a news-driven event, you really, if you're like building a longer term trading strategy or a longer term bias, you really want that event to play itself out. And today, remember, we had Friday, Saturday, Sunday, Monday, right? So we had from Friday, we have these 3 days off where the New York Stock Exchange and RTH markets are not open. Now, they're going to 24-hour trading, and we'll be talking about that later, and tokenization and all that good stuff. But for now, we've had 3 days where the the exchanges have been closed. So we really don't know what's going to happen. When this happens, you really have to trust the chart, right? For larger traders, I always start from large to small. For our larger traders, I'm always looking at a level and the distribution above it and how long we stayed underneath it when we broke it last time. So last time we took out the 68.90s, we were underneath it for 1, 2, 3, 4 days before we regained it. Now, we have this inventory, and this inventory that's long above it. So the question is, Do we do a look below and fail of 90 again? Or do we continue lower and do we test these lows? Right? I want you folks to not be surprised if we test these lows. Now, from a macro perspective, the gentleman in Washington tends to change his mind a lot. So when that happens, hey Doc, how you doing? If he does change his mind, be prepared for a look below and fail, right? We don't know if he is or if he isn't. You know, it all depends on the guy who brings him his Big Mac. You know, maybe if he gets his Big Mac, he'll change his mind. Maybe if he doesn't get his Big Mac, he'll be angry and we'll continue this downward move. The thing is, and there's also this Davos thing that's happening this week. Think of this as resetting inventory and resetting cost basis, everyone. Okay? So you just want to, hey Dan, how you doing? You know, you really want to just watch that level. For us who trade on a smaller time frame, right? Be aware of that. Now, the overnight, I left the overnight from Sunday night in. There's the shortened session from the holiday session. And here's our current overnight. As you can see, we are underneath both of those lows. I'm short biased, and I'll tell you why. Because we have a large zone here. We have a large zone, and if we take out this 68, 64 low here, all of this inventory, no matter how sticky the buying is going to get nervous. We failed to take out 70-30 when we did the all-time highs. So we're getting a rotation back down. 68, 67, 88 and 3/4, or 67, 89 for all intents and purposes. That's sort of on a longer term. How do we know if we're going to get there? You use the levels that I have provided to tell you whether or not the market, if the market takes out these levels, of course, you'll get continuation lower. If it doesn't, right? Yeah, Dan, I don't know about the Supreme Court thing. Remember last week they said it was going to be, or was it the week before, and then they delayed it? I really have no idea how that all works, right? And what their schedule is. So the thing is, you got a big question mark, right? Larger traders, what they're going to do is they're going to let this settle out, right? They will trade this during a swing session, right? They might be swing long, and as the market hits lower lows, they'll do some covering, right? For us, the nice thing is, as day traders, we'll wait. Don't get too married to any one trade, really, in this market. You know, this is a situation where we're going to have a little bit of uncertainty, and that's okay. Because uncertainty creates price discovery, right? And that's what we're doing right now. We've got price discovery, okay? So those of you who are short, let's see what we got here. I'm using the balance levels that I came up with yesterday. I had a balance of 15 to 21, 15 and 3/4 to 21 half. Doubled it to 4 and then doubled it to 81. And we seem to be, this is the 4 times discount zone, right? So we're going back and forth over 81 and we're working this out. We know we have sellers here at 89. And we know that we have bids here just under that, what was it, 82 level? Sorry, 77. All right, so we've got some bids here. Thanks, top list. Welcome. All right, so we've got, support is created by unfilled buy orders. So there's buy orders down here, right? Hey, Doc, you're on a 12-hour shift. Confessions of an emergency room doctor. That's a good one. Hey, listen, you had a great week last week, and even over the holidays, you pulled off some really beautiful trades. So don't stress yourself out. Just ease back into it, brother. Thoughts on swing trading intraday rather than scalping? I think swing trading is a wonderful thing. The question I have to ask you, Avalon, is how well are you versed at managing positions, right? I teach people how to scalp at first to sharpen their reflexes and train their edge. Because in scalping, you can get out of bad positions quickly. And that's what you need to do when you're swing trading. So I have nothing against swing trading. I think it's a wonderful thing. We have, Doc, for instance, swing trades. He has a couple of accounts, one he scalps with, one he swing trades with. Swing trading is great if you can manage your position. If you understand about positioning management and risk, I think swing trading is wonderful. But when swing trades turn into an investment because they've gone bad, because you can't manage your risk, then you can get into really serious trouble. I do not recommend swing trading for new traders because they haven't trained themselves to get out of bad trades quickly or understand why trades go bad. They don't understand the business. So if you're committing a larger amount of capital, it can be very stressful, right? Managing is your strong point, that's great. If scalping is too stressful, it's because you're doing it wrong. People who say scalping is stressful or it's too fast, it's because they haven't been taught by someone who knows how to scalp. They think scalping is, see, the whole thing about scalping is it's been presented as a bunch of young kids, with a Red Bull IV, just, hammering in and out of trades, doing hundreds of trades a day. That's not scalping. If you can learn how to scalp intelligently, it's not stressful at all. It's actually less stressful than holding a position because you really understand the business reasons for a trade and you get in and out of them quickly. So there's nothing wrong with swing trading, nothing against it at all. If you can manage positions and if you can do those sorts of things, that's great. If you don't know how to trade, don't try and swing trade. Right? If you're good at swing trading and if you've learned how to do it properly, that's a beautiful thing. We'll teach you if you don't know. But I always recommend that you learn how to scalp because I'll tell you something. A slow trader is just, it's like the worst thing in the world. Right? If you don't know how to get out of a bad trade, a swing trade, a scalp quickly, right? One thing I like about scalping is you have to admit you're wrong quickly. And that's a big problem for a lot of traders, admitting they're wrong. So that's why swing trades turn into they turn into investments. Right? Yeah, it's not that ugly, man. It's the market's just resetting its cost basis. It's a new year, right? Last year's business is over. So now we are setting up, we're building, think of every year as we're building a new house. So right now we're building the foundation for the next house that we're going to build this year. Right? How do you build a foundation? Well, you got to drill down into the ground and start pouring concrete. So right now what we're doing is, we're building a foundation. Right? you know. So if you're new, this is a great time to learn. I told you guys that this market would be very challenging, very volatile, and what I've been waiting for since the beginning of January is what are these guys going to come up with next? How are they going to, because we were sticky over 69.43. We had some sticky price action. We did a couple of small look below and fails of 69.43. I was like, how are they going to shake this loose? Well, let's just say that we're going to invade another country, right? Give everybody what do they say in Italian, right? What he loves doing is he loves giving other people agita, right? I'm not a political guy. My father wrote speeches for politicians, so I know that, I know the real deal in politics. It's all smoke and mirrors, right? And so are markets, right? Markets are all smoke and mirrors. How do I know? I was the kid who had to refill the smoke machine. So, you know, now we're seeing some liquidation. Let's see the trades you really want to take. If you're shorting, if you're already short, let's go map out where the sellers are. I'm not really looking for a log right here. I'm going to see what happens when London opens. Now London's going to open, and where's my timer? Where the heck? Where is it? Ah, there it is. So London's going to open in 11 minutes. I did not trade yesterday, and so let's open up the old trading account. We still seem to have bids at 78, 77. Let's go mark off where the sellers are. They're going to be here, right? And they're going to be here, in this area. So let's see. Let's see how the cookie crumbles. I am definitely not position long or advocating a position long. You can scalp long, but understand that there are going to be sellers at just under 84 and under 86. Okay. What's our contract volume? It's only 42,000 contracts, right? So it's a little bit of a slow night. Right. Now, wouldn't it be a hoot if everybody wakes up in the morning and this guy backtracks his whole Greenland thing? Sorry, I just yeah, he loves doing that. He's like, I'm gonna do this, and then he goes, psych, gotcha, right? Oh, never a dull moment with this president. Never a dull moment. You never know. He likes, I call him, if you look at him, and I don't, have you ever seen the cartoon Dennis the Menace? He's got the same hairdo as Dennis the Menace. And he's kind of the same, he's kind of running the presidency that way. He just likes to mess with people, which, it's good entertainment. So that's the one thing, right? So if you're short at the lows, and that's why we use this cost basis thing. So people who are new, right? We have a cost basis, and that's where the volume is. Then that's where you establish a cost from the liquidation of yesterday, and then you double it to the downside to find your discount zones, and you'll see that we're just teetering back and forth on this discount zone here at 68.81, right? Look below and fail, look below and fail, look below and fail. Now we're stuck. So when London opens here in a few minutes, let's see if we can shake anything loose. Dan, I'm messaging you in Discord. Check your messages when you have a chance. Using BADG charts since 6865. 6865. I got 64 and a quarter. Could be an area of importance, yeah. It could be, right? It could be truth. The thing is, I won't know until we go hit it with some order flow, right? So if you have a level that's an area of interest, that's great. I have lots of those, right? But I don't know how it's going to react until you go and slap it in the face with some order flow, right? So what I would do is I'd watch that level, right? So what are the practical aspects of your statement, right? That's a good statement, right? It's a good observation. Now, how do we put that into practical use, right? So you're watching 68.65 half. I got 68.64 quarter. And if you'll notice the low, was it of the 31st? Was it the 31st? No. The first. Look at the low of Friday the 1st of January, right? It's 68, 67-ish, right? Check it out. There's that low, right? So we're all in the same neighborhood, right? We're in the same neighborhood. So that is, for me, that's what I call a swing low, right? Or if you want to groove with your, you know, with my Latino hermanos, right? That's my piñata low. So if that low gets taken out, anyone who's long above it, right? That's where you break the piñata and all this candy is going to fall out and I'll be looking for here, right? So it's a really good observation. Really good observation, right? How do we trade it? Well, you don't trade it until we get there, right? We could do one of these. We could do a look below and fail. We could do a look below and go. But until we get down there, we're not going to know for sure. Because you could never predict, right? You could think, oh, it's going to support. And we get there. If we get to 68, 64 and somebody drops a 10,000 contract sell order, it'll break through that, right? It'll just snap like a twig. But if you get there, there's only 500 contracts for sale at that time, then it'll bounce off that level. Get what I'm saying? So you really have to sit and watch and wait for that low to get tested. But there's nothing wrong in stocking it, right? Nothing wrong at all. Make sense? Cool. Yeah, we're all in the same neighborhood, right? Let's see what happens. So far, bit of a snooze fest. What country are you in, top list? Curious. I always like to know where people are listening from. It's one thing I love about this new information age. You get to talk to people from all over the world. It's very cool. Oh, hey, listen, if you can't say, that's okay, right? Hey, I understand, man. I understand. No biggie. So we're sitting here, and this is kind of like a paper towel, right? We're absorbing all of those trapped longs. You know, they're all waking up, they're selling. Volume's kind of light, so it's not. You'll notice that even yesterday and today, the selling has been orderly, right? It's not like, you know, it's not like there's a fire in the nightclub and everyone's trying to get out that one exit door, right? That's that's what you usually see when you see panic selling. The selling has been sort of very orderly liquidation. Something to always be mindful of when you're a trader. You want to make sure that you have some situational awareness about the type, now, to use a fancy word, order flow, right? Order flow is just a fancy way of saying the flow of customers coming in to a market. That's all it is. It's just so when people try and sell you order flow software or volume software or all that stuff, that's all marketing, eh, folks? Just so you know. Just so you know, right? The best order flow software is a simple chart. A simple chart is the best order flow software there is, right? It's all you really need. You don't need to spend thousands of dollars on software, right? I mean, if you're trading, if you're trading $100 million, $50 million, you can get more advanced software because you're trading size. That's understandable. But if you're a retail trader, you don't need order flow software. You see the 1 minute chart is telling you, hey, there's a seller at 84. How do you know? Because we just looked above 84 in the last 4 minutes and sold back down. So you know that sellers are competing there. Now, London is opening now. Let's see if those sellers are still there, right? Let's make this bigger. Really simple. You can see, look, see how that candle came right to that white line, stopped and moved lower. Now, if those sellers see buyers, what are they going to do? They're going to raise their price up to the next selling level, right? Hey, Archimedes. Yeah, everything's down right now because the market's in price exploration, because we had a news event, and nobody can really say what the heck's going to happen. So what we have to do, if you're trading the night market, you really want to make sure you just trade the levels for now, right? Even larger traders, before they build a position, they'll scalp around a little bit to put their fingers in the dirt to feel around and see what the order flow's like, right? That's what you got to do. That's what you got to do. As a larger trader, you'll test, right? Let's see if that bid under 78 holds, right? Because under 78, we have all these unfilled buy orders. That's what support is, right? If you folks know what's the definition of support are unfilled buy orders. Why is that? Because when the sellers get there, think of this level as a glass door. If you look through the glass door and you see all these people lining up, you're going to raise price just like they're doing now. You see? If you see the customers walking out to their cars in the parking lot, you chase them out and offer them a lower price. Lower the offer. Does that make sense? So all risk assets, Archimedes, are down. Bitcoin, this. How are our silver bugs doing? Well, right? They don't want to spoil that rally. Right? So all our risk assets, right? Speculative risk assets, right? Are being sold off. Now, why is that? Well, if you're trading ES and Bitcoin and NQ, right, and you're a large trader, most of your positions are linked to each other. and you'll start selling your profitable positions. And sometimes you'll have margin calls, which will take you out of all your positions, right? So everything starts getting thrown out. So, that happens. Let's go test that 78 bid and see what's shaking down there under 78. That's a double bottom, right? Let's see if that breaks. See how the J period and the I period have the same low? That is what we call a double bottom, right? That is also called a poor low. Now, why is there a poor low? Because there's competitive buying here. Now, in normal circumstances, you buy a poor low, you put your stop underneath it, and you sell into the strength that's created by the lack of supply. If you are doing that, your risk is limited. So say you're long 78, stop 77, try put out an offer at 79 and a half. If it doesn't get taken, hey, the sellers have moved from here down to here, right? Yeah, Alexander, I don't follow the gold market so much. I haven't looked at really gold since 2012 when I had my heart attack. I was working a mining deal from 2007 to 2012, but I haven't looked at gold since then. I know it's done spectacularly well. You see how we have sellers at 68.80? Now let's see if that double bottom holds or if it breaks. Yeah, we were drilling up in Alaska, and the CEO of the company was doing death spiral convertibles, and he hired me and he paid me $20,000 a month just to watch the stock and make sure his financiers weren't screwing around with it too much. He's a really good guy. He treated me very well. So every month he'd send me 20 grand worth of stock. I'd sell it. And I didn't have to trade it or anything. I just have to watch it and tell him what was going on. There's a break of that low. Okay, that's predictable. Now let's look for 68.74 and a quarter. That's my next level down. And where's truth? Let's go mark that 68.64 and a quarter level down here and see whether or not we can go and tickle that. There's 74 quarter. There's 64 quarter. The problem with these liquidations after a holiday is the order flow, the flow of customers. The customer traffic is very unpredictable. So how do you keep from taking bad trades? How do you keep from just getting stopped out? You're long, you get stopped out. You're short, you get stopped out. What you want to do is you really want to wait until the market shows you that it has successfully worked out an edge. Our edge is the look below and fail of 81 or the look below and go, right? So if you see sellers, you could be short that overnight low and put your bids down here because the order flow is unpredictable. You don't know how much meat is on the bone. So you know that there's a seller at 80, so that's your stop. So if you're short 79, 78, your stop is 80, and put some bids down here, right? If you're short 10 contracts, put a bid here, put a bid here, put 2 here, put 4 here, right? As the market goes down, you'll be able to cover, right? That's how you short intelligently, right? Once you see the offers moving lower, right? What did I say? The size sellers, they see that the people are moving. They're not coming in the store. The store door was here. They're going to the parking lot. So they're following them lower and they're offering them product at a discount to get rid of their inventory. This happens because of price competition. You know, you hear these people on social media, they say the buyers and the sellers are fighting each other, which is probably one of the stupidest things I've ever heard in my life. Sellers compete with each other to get rid of product. Buyers compete with each other to get cheap product, right? But sellers and buyers don't fight each other, right? That's like you going in, you go into a store to buy a pair of shoes and the sales clerk pulls a knife on you. Does that make any sense at all? It's probably one of the dumbest statements I've heard in retail trading, right? The buyers and sellers are fighting each other. It just makes no sense at all because it's a market, right? Hi, I'd like to buy a new pair of shoes. Well, that's only if you go into a Rolex store, right? And they're like, no, we have nothing for sale. But what about all these watches? Oh, no, no, those aren't for sale. You have to go on a list. Get out of here before I call the cops. Oh, Lord. Okay, let's see if we get those sellers at 78. That's that old overnight low. There should be a little bit of trapped inventory there. If there isn't, if they see buyers, they're going to lift their offers up to 78. Okay? Yeah, display only, right? See how they see buyers and they're going to start creeping the prices up. See if they follow. Nice work, Truth. Nice work. And there's that seller at 78. You see how they stepped in and sold at 78? So had you been long 74, 75, you know to take profits there. Pay yourself in this market, my friends. Do not get greedy. Okay? Don't be short-term greedy. Be long-term greedy, my friends. Right? Be long-term greedy. Okay? Make a little bit here, make a little bit there. It adds up. I used to have this old Italian client. He'd always say, listen, kid, don't be greedy. A million here, a million there, it adds up. You know, don't try and make 5 million in a day on these deals. Make a couple of $100,000 here, a couple of $100,000 there. It will add up. He was right. We also have single prints, which I forgot to put in. These are our trapped logs in this box here. Hola, Juan. ¿Qué pasa? Right? As we come up over 79, your next sellers are going to be here just at 80. See how they're front running that level? If we get over 80, 81 and a quarter is your next target. Okay? So we had that old overnight low. We went and put in a new one. Let's see if we stay over 77 now. Right? So those 77 buyers, they backed off down to 73. When they saw a bargain, right, that was a little Black Friday sale, right, on a small time frame. What I'm looking for now is that point of control. That overnight point of control, which is where 70% of the inventory is priced in this session. I want to see that move down. Right? I want to see good absorption. So that's what, 1,867 contracts? Let's see if we can move that point of control down here and absorb that overhanging inventory and let it fall out into here, and then we can do one of these. You saw the bid at 73, right? You found the bid, right? Well done. Beautiful. That's the whole thing in trading. If you want to know what the simple way to trade is to find the bid and work off of it. Large traders, what they'll do is they'll short a market down to the bid, cover, then flip and go long. That's how traders traded for hundreds of years. They'll short a market down to where it hits a wall, then you cover and you go long. Right? In simpler times. There's 81 and a quarter. Let's see if we accept over that. Good excess on the profile. Let's see where the sellers step in. Now, if I was long 74, 75, 76, I would be banging them out with both hands here at 80. Right? I'd be selling everything I've got. Because if you do the math, if you bought 50 or 100 contracts between 75 and 78, it's good money to sell them between 79 and 81. Right? This is how size traders think. Size traders don't get married to positions, especially at 3 o'clock in the morning. Right? New York time. So, folks, if you want to learn how to do this, if you want to learn how to trade in a practical way, come join us at the tradingsyndicate.org. I'll put the link in here. We're the most reasonably priced room for people who don't want to spend a fortune and want to get real practical trading instruction, right? I also do lifetime one-on-one coaching. If you're interested, reach out to me. I'm the only educator. When I take you on in a coaching manner, I will work with you for as long as it takes. And it's not like a rolling fee, it's a one-time fee. I'm going to be raising my prices this year. So if you want to get in, reach out now, right? I put a lot of time and effort. So look above and fail of 81. Let's see if we bid 78 again. So now after this move up and the move back down, let's see where the buyers come in. Right? Are they going to come in at that old place where they were buying before? Remember, they were buying here. There's some bids at 77. So what are the takeaways from tonight or this morning's trading? Number one, don't get too married to positions. Number two, right? Realize that the order flow is going to be unpredictable, right? So watch out for that. Manage your expectations and manage your risk, okay? You have to manage your risk in events like this. Let the large traders work out certain levels. Now we know we have sellers at 81. And now let's work out where the support is. You don't want to be the one who works out the support. You're just going to get run over. Let the larger traders figure out where the support levels are and then go in and trade, right? In trading, they always tell you be patient, be patient, be patient. I don't like telling people to be patient because that makes them impatient. I tell you to be smart, right? Thanks, Top List. Right? Be smart about it, right? You got to be a little crafty. You got to be a little shrewd. You got to be a little sneaky if you want to be a retail trader. You don't want to be the first guy in line walking around holding his wallet. Retail traders, let's see if we hold that 72. Now let the large traders work this out. See, I always think of retail traders, they're walking down a bad area in a city, and they're just walking around with $100 bills hanging out of their pockets, just waiting to be robbed. We teach you how to be street smart so you don't get robbed. Practical, useful information. There are times when you take trades, and there are times this was a decent short, right? The look above and fail, we would have been short, put our stop here. You know that there's sellers here, and you put your buy orders down, so when the market goes down, you cover. When you go long, and you put your sell orders out. As the market goes up, you sell into the strength, right? So we seem to be double bid here at 73. Let's see if that gets back above that old 77. This is the old overnight low, and this is the one that we had on the London liquidation. Don't ever be worried about sitting and watching a market, because that's how you learn. When you sit and watch a market, you don't have this emotional pressure on you. When you're in a trade, right, as soon as you're in a trade, your powers of observation just drop. Why? Because you haven't trained yourself to observe. So what we do is we teach you how to watch a market and observe it so you actually understand what's going on. That way, when you go to trade it, you'll have a much better odds of success if you actually understand the business that creates the trade. Every trade is a business transaction, and there has to be a valid reason for taking a trade. So our business model is created on this. There's a business reason for me to take a trade. Like if I was shorting this, I know that there's a seller at 76, 75, and if we're going to break that overnight low, right, the next candle is going to open here. See how we break that? You could be short because you know the sellers are lowering price to capture the buying, right? If we had gotten above 76, there's no reason to be short because those sellers are raising price. So all our trades are based on common sense business. There's no mumbo jumbo, there's no indicators, there's no volume analysis that doesn't work. There's none of that stuff, right? There's a business reason for the trade, there's a business reason to stay in the trade, and when that business reason is gone, you book it out of there so fast it makes everybody's head spin, right? And now we're finding the bid. This is called price exploration. And this is where you let those large traders find what's lurking down here. Because you don't know, right? So for now, 69 and 3/4 is bid. Let's see where the sellers step in the next 15 seconds. Take your time. Assess the situation. We're getting close to that 65 level, Truth. Right? We're creeping up on it. Creeping up on it. Yeah, it's getting spicy. If we take out 68, 64, we'll see further acceleration to the downside. Which is perfectly natural, right? Perfectly natural, right? It's good for a market to find and reset its cost basis. I have some balance levels on a 15-minute chart that I'm looking at. And that price target is around 48 if we take out the 64 level. We'll see. I'll post that in the room. It's going to be a very interesting open. Very, very interesting. It's okay. You guys, you got into trading because you wanted to be challenged, right? Never a dull moment in this business. Okay. Any questions, folks? So there's our first overnight low, the second, third. It's just going to bounce around here. 5 minutes. We'll see if we have more single prints to the downside. Market profile is an interesting way of keeping track of inventory. Yeah, let's see. No questions? You guys all right? Alrighty. What's up, Rag Daddy? Good to see you. Okay, folks, you have a wonderful morning. Come visit us at the Trading Syndicate. Learn how to trade with some common sense and practicality. No BS. We'll teach you when to trade and when not to trade. Have a great morning. And I'll be back at 9 o'clock Eastern Time, 2 p.m. UK time. Till then, trade smart. Let the larger traders pave the way. And we will see you in a few hours. Bye for now.